Hi, and welcome to this one-off special from the Columbia Threadneedle Investments Eye of the Needle podcast team. In this episode, we're celebrating International Women's Day on the 8th of March by speaking to two of our female fund managers about their route into asset management and the work they do. I'm Karine Walker, and joining me as co-host of this episode is Mark King, Head of EMEA Content. Hi Mark, how are you?
I'm very well, thank you.
Joining us today, we have Maya Bhandari, Portfolio Manager in our Multi-Asset team, and Tammie Tang, a Portfolio Manager in our Fixed Income team. Welcome to both of you.
Hello.
Hello.
Let's kick straight off with you, Maya. You've already appeared once on our Eye of the Needle podcast, of course, but can you remind us how you got into asset management in the first place?
Well, Mark, as we sort of discussed back then, I've always had an interest in economics. My grandfather was an economist and a bullion trader and finally a fund manager. And I suppose that's where my journey into asset management really began. I remember as a young girl underlining passages that I didn't understand from his old textbooks from the London School of Economics when he was at work. Other than ruin his books, and more seriously, I did go on to read economics and then really found my way into fund management. I should say I didn't have a grand plan in my early 20s, other than to soak in as much knowledge as I could. After studying as long as I possibly could, and my folks would attest to that, I then spent 10 years on the sell side, first as an economist at Lombard Street Research, and then on a trading floor at Citi before moving into asset management 6 years ago. What draws me to it? Well, I love the analysis, the rigor, and the commitment of investing, and I'm really privileged to work with some really talented and bright women and men. I'm constantly learning, and it's a fascinating and very rewarding job.
Great, yeah. And Tammie, did your route into asset management follow a similar path?
No, and I think that's what's great about this industry. It seems so many of us follow very different paths to where we are. And so for me, I started my career as an actuary at PricewaterhouseCoopers. For those that may not know, actuaries tend to work for insurance companies and pension funds. And so I was well trained in mining data and building some fairly elegant models of insurance risk quite early on, but I felt I was really drawn to the global markets. I just really wanted to be part of the market and following the narratives of what's emerging of the day, and more importantly, to be able to assess what that meant in terms of the prices of assets. So I changed and I got a markets job at JP Morgan. And I started structuring securities there, and that role evolved into managing some larger portfolios of interest rates and credit risks, and it was just great training. It was a great way to learn how to take measured, sensible risks. But the final thing then I felt I wished for was something that was just a bit more tangible and impactful in terms of an end relationship with the clients. So I think like many, I moved from the sell side to the buy side, and now here I am, and I've been here 8 years. So I now manage our active institutional investment grade strategies in fixed income, and I also deputise on our social investment bond strategies.
Wow, so you could have been an actuary. Stayed an actuary. Sticking with you, Tammie, would you have any advice for young women looking for a career in this particular area?
I would say go for it. Our industry, like so many industries, we need more young women to join and, more crucially, to stay. But if I were to comment on some of the skills that might help if they were interested in being a fund manager, it's definitely good to have good skills in assessing risks in a measured way so that you identify what's a threat, what's an opportunity, and you need to be quite good at pricing securities. And also it's very valuable to be able to deliver results to your clients consistently. But I think the opportunities in asset management are wide, core to the business just as much as the analysts that we rely on, as well as the sales and distribution teams, and I could go on as to the other support functions, legal, accounting, etc., etc.
Marketing.
And Maya, has your career followed the path you thought it would?
Well, Karine, with the benefit of hindsight, which is of course a perfect science, I can see how investing may have been my direction of travel for some time, but it almost certainly didn't feel like it at the time. My first proper job at Lombard Street Research was as a UK economist. When I left, 6 years later, I was running emerging markets research for them. During my time there, though, the firm evolved from being a pure economics shop to one that called Markets too. And I think that, again, with the benefit of perfect hindsight, was an important turning point for my career because it brought financial markets into the fold. At Citi, my role was very global and market focused. I was essentially helping the present me make investment decisions. All said, I think the geeky 10 or 15-year-old in Bombay, or Mumbai as it's now known, where I grew up, would be pleasantly surprised with my career path thus far.
Absolutely.
Some of us are still geeks today, Maya. Tammie, has the industry changed since you first entered it? And if so, in what way?
I think our industry, just like most industries, it's not static. And indeed, it's evolved to the changing preferences of our consumers, our clients. And very obviously, the rise of passive and ESG have been just such dominant themes. And so to touch on the former, the fact that passive has just taken so much of industry asset or AUM, for us, it's meant that we've had to just strengthen our value proposition. Our clients get so much more value for money, whether it's in terms of the risk-adjusted return versus the fees they pay, or the range of solutions or client service that they are offered to actually suit their bespoke needs. And then on the latter, with the prominence of ESG, I think it has meant that we now must clearly illustrate how our investment decisions, how our engagement lead to better outcomes for our environment, our communities, and the way the companies we invest in are led and governed. But in many ways, I think it's great. It's great for our clients. They get more value in terms of the qualitative and quantitative aspect from their fund managers.
And Maya, what does a typical day at work look like for you?
Luckily, no 2 days are the same. There's no typical day, in other words. And I think that's part of what makes my job so interesting. My ultimate objective, of course, is to deliver the best risk-adjusted returns for our clients. And so I spend a lot of time thinking, discussing, and reflecting on the world and the mosaic of countries and policies that sit within it. I do a lot of both qualitative and quantitative work to frame my views. And I'm passionate about financial markets, perhaps too passionate if you speak to my husband. I also spend some time articulating our views and investments to clients, which is also a very important part of the job.
Yeah, and we should talk a bit more about that. And sticking with you, Maya, you're in the world of multi-asset investing. How would you define that?
Well, Mark, at the simplest level, as the name suggests, multi-asset is investing across asset classes in equities, different flavors of fixed income, commodities, property, and alternatives. But there are many, many ways to do multi-asset. Now, the portfolios I manage are benchmark agnostic. In other words, I start off with a blank sheet of paper. We don't have to own anything and only invest in assets that offer good prospective risk and or return characteristics, both individually, but also in context of how they interact with everything else that we may hold in portfolios. The strategies I manage tend to have target returns, either total return or income returns, and a risk or volatility budget against which to achieve them. As such, I would say for me, multi-asset is about joining the dots within and between asset classes. What risk premia are different asset markets reflecting, and how best to invest our views for our clients. I should also add that multi-asset investing is a core part of what we do as an organization, and we've been doing it for an awfully long time, 25 years. Both important reasons why I was drawn to Columbia Threadneedle as a place to build my career. And I'm both a member of the Asset Allocation Strategy Group that steers all of these portfolios, and of course responsible for individual strategies as well.
And Tammie, fixed income can sound quite complex to those that are unfamiliar with it. Is there an easy way to describe fixed income?
I'm so tempted to say no. As you say, our asset class is just so well reputed for being technical and complex. So let me try. Fixed income, it's basically loans which you can buy or sell. And so I think for many of our listeners out there, many may have a mortgage. They've borrowed from the bank, and they pay regular interest, and they pay down their loan amount over time or at the end of their term. And so fixed income is very similar. It's just that a key difference is the borrowing entity. Here we may have entities borrowing being governments, government affiliates, or corporations. And I happen to work in the segment of the market where the borrowers are corporations who tend to be the larger, strongest in the market, and they are also the highest rated by external rating agencies, Moody's, S&P, Fitch. And then on the investment side, the investors, they're people like us, the asset managers, they're gatekeepers to our client savings and wealth accumulation. So after investors make initial loan, the investors can also then buy and sell bonds amongst themselves. So there's a very active secondary markets, hence loans you can buy or sell.
And some of those loans will be for a year, for 3 years, 5 years, etc.
Yes, and there are corporate bonds out there that go out 100 years.
Right, yeah. And companies, of course, issue debt for lots of different reasons.
Indeed, and so some of the more common reasons that they issue, often it's to just refinance existing debt that they have outstanding. They may also issue in order to acquire other companies. That's common right now, given growth is so low, so growth must come from buying others. And also they may just issue just to finance just the usual course of business, which they will call general corporate purposes.
Okay. Macroeconomic trends. These are huge things that can sway markets. We read about them in the news. To what extent do you take into account these themes that are happening, whether it's trade wars or politics? Maya, maybe you first.
Yes, of course we do. They matter enormously, and there are many areas that we focus on, and the two you mentioned, trade wars and politics, are certainly amongst those. Yeah. Perhaps starting with trade. I mean, trade wars have been really highly redistributive in an unpredictable way. Trade wars are really attacks on productivity. I think they reduce the size of the aggregate economy. And so they really impact what Tammie was just talking about, bond markets, they impact equity markets, they impact cash flows, they impact policy, as we've seen over the last 12 to 18 months. Now, our key judgment on trade disruption has been that although there is broader uncertainty around trade, the signing of a phase 1 trade deal between the US and China has, if you like, taken some of the heat out of trade concerns. That said, the latest outbreak of the coronavirus is proving to be quite disruptive already to some of those global supply chains, although I should say, frankly, it's very difficult to quantify at this point, at least, what the impact of that will be.
Yeah.
On geopolitics, I suppose that there are two particular areas of focus for us, Brexit and the US elections. Brexit is probably the most important determinant of total returns over the next 6 months for sterling-based funds. The US elections in the next few weeks are really quite key to see what comes through. On Brexit, I'd say we don't have certainty, but we have less uncertainty than we did, say, in December, for example. And that's presented a bit of a valuation opportunity for us in asset allocation strategies for UK equities. You've got a 15-year disconnect, if you like, between valuations valuations, i.e. the price that you pay for UK equities versus European equities or US equities. And that's something we've sought to add to and capture in our strategies where there's a clear investment case.
Yeah. And Tammie, do you look at the wider macroeconomic background?
Yes, of course. We consider micro and macro. We have to consider all trends in our portfolios. I think perhaps the macro trend we pay most attention to is central bank policy, and that is because markets will just correlate with the direction of policy, whether it's easier or tighter. And it's a big informant for us into the level of aggregate risk-taking we will consider in our portfolios. So, for example, last year we saw the developed market central banks restarting easy policy, with the Fed cutting rates 3 times and the ECB restarting bond purchases. So it was a strong year for fixed income returns. And so this year, as we look ahead, definitely in the near term, it feels like central banks now are bit more on hold, a little bit more sidelined. But I think many in the market acknowledge that the hurdle to more easing is probably much lower given the prospects of weak prospects of growth and inflation. That hurdle is just much lower than a hurdle to rising rates and a much tighter policy.
Right. And finally, what would you consider your greatest success professionally, and is there anything you'd do differently if you could go back in time? Tammie, do you want to take that one?
Sure. Well, Corinne, I was actually hoping that my greatest success is yet to come. But I was very pleased when I first entered the markets, and also very happy when I first started managing portfolios. But in terms of what I would do differently, I think I would have loved to have invested from a much younger age, investing savings. It would have meant I was a participant in the market and would have had such a head start in terms of experience. And I think it was also Einstein who had said that compound interest is one of the 8 wonders.
Yeah.
There you go. No, that's a good bit of it. Oh, yeah, that's a
We
good
all
one.
could have benefited from that.
Yeah. What about you, Maya?
Golly, a big question, and I suppose I'd go back to where we started. The geeky teenager in Bombay would be quietly and pleasantly surprised with my career path thus far. But there is, as ever, a lot more to do. What might I do differently? Well, I studied both economics and politics, and I would have loved to study philosophy too. And maybe I will one of these days.
Why not?
Absolutely, yeah. Great, some interesting picks there, thank you. Well, that's about it for this special International Women's Day episode. All that's left is to say thank you to our guests, Portfolio Manager Tammie Tang and Maya Bhandari. Thank you.
Thank you.
And thanks to my co-host for this episode, Mark King. We'll be back with another episode of Eye of the Needle soon, but until then, thanks for listening and goodbye.
Important information. Your capital is at risk. Past performance is not a guide to future performance. The analysis included in this podcast has been produced by Columbia Threadneedle Investments for its own investment management activities. Information obtained from external sources is believed to be reliable, but its accuracy or completeness cannot be guaranteed. None of Columbia Threadneedle Investments, its directors, officers or employees make any representation, warranty, guarantee or other assurance that any of these forward-looking statements will prove to be accurate. The mention of any specific shares or bonds should not be taken as a recommendation to deal. This podcast is not investment, legal, tax or accounting advice. Investors should consult with their own professional advisors for any advice. Issued by Threadneedle Asset Management Limited, registered in England and Wales, number 573204, Cannon Place, 78 Cannon Street, London, EC4N 6AG. Authorised and regulated in the UK by the Financial Conduct Authority. Columbia Threadneedle Investments is the global brand name of the Columbia and Threadneedle Group of companies.